So we're on to our third part of investing in gold. And this time we're chatting to Sean Sanders, founder of digital investment platform Revix. Mapelo, you and I have had him on before, so hopefully our listeners will remember that discussion. And Revix are using digital tokens to provide investors with exposure to this precious metal.
Jeez, Maya. You know what? It seems like there are so many things going on, so many investment options. But Sean, what exactly is a digital token?
Hi, Mapelo. Hi, Maya. So a digital token, in the most simplistic terms, is really a digital representation of ownership. So if you had to have a title deed to a property that was digitally stored rather than held in physical form, that's essentially what we're offering with gold. So Pax Gold, which is the product that we've launched, is run by a company in the US, and it's a New York trust company called Paxos. Now, Paxos introduced Pax Gold last year, October, and really, in a nutshell, what Paxos is a crypto asset that is on the Ethereum blockchain. Now, this is a bit of a mouthful. It is a crypto asset on the Ethereum blockchain that provides you direct exposure or legal ownership to gold that is held in London vaults. How global is all of that in a single sentence there? But that's really what it is. It's legal ownership that is held in digital form rather than physical form.
So through this digital token, it's almost like a stamp to say you own a little piece of that gold bar. And Sean, how do I know that gold bar hasn't been sold multiple times?
So that's part of what Paxos offers through them being a trust company. They will go, and there's a serial number on a gold bar that's sitting in a London vault, and that serial number then would have to match with the token that you have, and there would be a serial number on the token that you have, and you naturally have to have those match up. It's just the same as, if you had gold held in a vault somewhere in South Africa, and you were the one with the certificate saying that you have some of that gold, how would we be able to validate that this is your gold? Okay, right, we're going to do a stock count. We're going to make sure it's still there. So it's that sort of arrangement. It's actually a lot simpler than what it sounds.
Yeah.
But I mean, why tokens? Why digital tokens? Why not just any other of the existing options to invest in gold?
Yeah, so you're speaking to the crypto guy. So why not tokens? Investing is evolving, and in the past, you maybe wanted to own physical gold. Now, owning physical gold in South Africa, I would not recommend doing that. Naturally, you've got to then insure it. You've got to then get custody done some way. I'm not even too sure you manage to own physical gold in South Africa unless you've got a ton of money and you're able to do that. So another option is then investing in, say, a gold ETF. Now, a gold ETF is actually very similar to a gold token. The difference though really, and it comes down to a few different things, but the main difference really is that if you own a gold ETF, they only trade during office hours. So 9 until 5 in South Africa. Gold ETFs also have annual custodian fees. So generally speaking, you're paying between 20 basis points, which is 0.2%, to about 40 basis points, so 0.4% a year. Pax Gold doesn't have any custodian fees. So that's another benefit. And Pax Gold trades 24/7. So if you want to buy or sell your Pax Gold token, you can do that at any point in time. It doesn't just need to be during office hours. So there's a few inherent benefits. Another benefit, which is really just the evolution of the tokenized ecosystem and all the rest. And when I say the tokenized ecosystem, I'm really referring now to cryptocurrencies more than anything else, is that they trade 24/7 and they don't have any settlement delay. So a big thing in stocks, and a lot of, I think, retail investors don't necessarily think about this all that much, but when you invest in a stock and you sell out of that stock, in South Africa, there's a 2-day delay where that settlement is not the same as execution. So you can execute a trade and say, I'm selling this stock, but you'll only be able to withdraw your funds in 2 days' time from your broker. Now, with tokenized securities and assets, like what we have with Pax Gold, settlement and execution happens at the same time. So you could sell your asset and you can withdraw your funds immediately. So that's, in my opinion, the benefit of having a token rather than having a physical share or owning physical gold.
I mean, it's interesting you say that, because Mapelo, I sold some Satrix a while ago, thank goodness before the crash. And I had to wait a week actually for settlement with them. So if you had your gold ETFs, you know, for example, you probably could wait, you know, some of those platforms you can even wait up to a week. And the other interesting thing which I hadn't thought about, and we actually talked about gold ETFs in the previous discussion with Craig Pfeiffer, was of course that cost, that custodian cost, because gold doesn't earn you an income. It's actually one of the things that I don't like about it. You have to purely wait for a capital gain. There is no income that it generates. So that, you know, if gold isn't performing well or if it's flat, you haven't even really got dividends or interest or anything to cover that custodian fee. So that's quite significant.
It can add up. I mean, the custodian fees certainly, I mean, if you're thinking about even on the conservative side of things, 20 basis points a year, so 0.2%, you run that over 5 years, all of a sudden you're looking at excess of 1%. I mean, with gold, which is a very safe investment compared to other investment opportunities out there, I mean, that's eating into your returns. And then generally on top of that, you need to think about the brokerage fees that you have. So if you are on a, I don't know, brokerage platform, Easy Equities or anything similar to that, you're then going to be paying monthly fees. So that's something else to consider as well.
Yeah. And what about the protection for an investor? Can you go off with all my tokens? Can they just disappear? I remember in the last conversation we had, we spoke about, you know, losing some sort of a key or code. Can my tokens disappear in this case?
Yeah, so not with Revix because we look after your tokens, but if you were dealing with Pax Gold tokens yourself, yes, you could lose them. That is one of the biggest risks of being in this ecosystem where you don't have all these intermediaries that you can rely on. So we look after our customers' Pax Gold tokens, which means for a customer that comes to our platform, it's very similar to investing in a gold ETF. They would come along, they would say, right, I want to buy your Pax Gold token. We have a minimum investment amount of 500 Rand. You would then buy it. You would essentially track the price of gold with that token, and you wouldn't have to worry about your tokens being stolen. But I mean, that is a risk when it comes to crypto assets in general. And it's an area that needs to evolve a lot more.
So do you now, what is the cost then of that from Revix perspective? So we just spoke about the holding costs of an ETF, but you obviously are holding the tokens as a custodian, I imagine, and you're playing that role. So what cost is there then for the investor?
So we believe that we've got a whole bunch of other interesting products coming in the near future and that we have at the moment that you may be tempted to buy into. So we don't have any custodian costs when it comes to Pax Gold. You would have our 1% purchase fee. Once you're into Pax Gold, there's no recurring monthly fees or anything like that. You can hold for 1 day, or you can decide to hold on to Pax Gold for 3 years or longer if you would like. And you can decide to sell out later. And again, there's another 1% transaction fee, but that's it. There's no other custodian fees in between there. So our goal really is to get you to go, okay, great. You know, I want to try Pax Gold, a very traditional investment of sorts, or I suppose a traditional investment in that gold is old school. But then we want you to come to maybe the newer school gold being Bitcoin. I
mean, I actually quite like it. Yeah. Sorry, Maplo, I was just thinking about that idea of it is the oldest form of currency meeting up now with the new technology. Sorry, Maplo.
Yeah, so for me, I just wanted to know, what is the minimum investment for these gold coins, for these digital coins?
So our minimum investment is 500 Rand. You can buy into PaxG's tokens for a couple cents really. But again, then that puts you at risk where you need to understand how to actually go about buying these tokens. You need to open an ERC20 wallet. So we take care of all of that for you, but our minimum is 500 Rand.
And how are you finding, I mean, investment behavior? So one of the things that kind of comes to mind for me as we were discussing this was this immediate settlement, and therefore the opportunity to quite aggressively trade gold through this. Because one of the things, this is my feeling, to me gold isn't where I put all my money, because it's so cyclical. It doesn't generate an income. I can't really predict things. It's a fantastic insurance policy, and whether you hold it in, by the way, Sean Krugerrands is how you hold physical gold if you want to buy physical gold. So you could hold Krugerrands, you could hold your ETFs in your share portfolio. Obviously you can do it this way, but if you want to make, as an insurance policy, but if you want to make money on the massive fluctuations of the gold price, this could possibly be a way to do it.
Yeah, but then it's, you know, going to a casino, putting your money on black. and waiting for the outcome. Again, I mean, trading gold is incredibly difficult, right? Because you've got a whole bunch of professional traders in the market. They probably have more information than you do. I think that's probably the best advice that I've ever been given when it comes to investing or trading, which is somebody else will know more information about you. And unless you've got an informational advantage, what benefit are you going to have trying to trade it? You're really gambling it. I think that's the best way to look at that. So yes, I think tokens are being used a lot more for trading. And that's why you see in the crypto world where it's become a massive casino rather than being a long-term focused sort of investment category, really. That's something we're wanting to change over the long term. But, and just coming back to the Krugerrand point, so you physically own Krugerrands and you have to hold on to them, but what's the risk of somebody then actually coming to your house? You know, we've got tons of crime in South Africa, and actually stealing them from you. And I think that, to me, there's a risk that's associated with that, and cost obviously with insurance, that makes owning physical Krugerrands, it's like nonsensical. It doesn't make sense to me. A personal opinion, of course.
Yeah. Well, what we did ascertain in our discussions earlier is that Krugerrands are fantastic ways to smuggle money out the country, apparently in the legs of tables. This is what Craig Pfeiffer told us in his research. So I suppose it all depends on why you want gold. Do you want gold as an insurance policy in your portfolio? Do you think you're a gold expert in predicting trends, or are you wanting to just put it in the legs of tables? So I suppose that is part of the challenge.
Yeah, but Sean, one of the things we spoke about again in the last podcast was around tax. So I have my digital tokens and I exit. How does that impact my income tax?
So in South Africa, if you own any investment for less than 3 years, that would be then deemed, any gain would be added
CGT.
to your annual, or no, it would not be CGT. It would be added to your personal income tax. So that gain would be added to your personal income tax. If you hold it for more than 3 years, that's kind of the loose definition. The actual definition is that it would be based on your intent. So if you intended investing over the long term, it's quite hard to prove either or, but if you intend to invest over the long term, then it would be CGT tax for any gain, so capital gains tax for any gain. And yeah, I mean, it's no different really for a token versus owning physical gold or buying an ETF. It comes down to, if you own it for less than 3 years, it's going to probably be down to your intent more than anything else. And then how you disclose that to SARS, which is really, it's entirely up to you.
And the digital tokens, are they liquid enough? So if I want to exit today, will someone buy them off of my hands?
So there is a liquid market. There's quite a few different exchanges around the world that are trading Pax Gold. I think if you came along with, let's say, 2 million Rand, and you wanted to trade 2 million Rand in one go, you would move this market. It's not liquid enough for 2 million Rand trades in one go. So you would need to stagger that out. Personally, Revix hasn't been dealing with 2 million Rand orders just yet. I mean, touch wood, I'm waiting for it to come in. So hopefully somebody listens to this and they want to move this market. But no, unfortunately, there isn't a deep enough market here. So that is definitely a downside of the tokenized version of gold versus the likes of a gold ETF, where you've got market makers in the background. And I don't want to get into the complexities of that, but you've got, you know, institutions that help make sure that the price of what you're investing in stays very true to the intrinsic value of the gold price.
So that's actually also what I wanted to ask from that is that, you know, you spoke about that if you get too much trading, and one of the problems with crypto is that's why it's so volatile, because of the aggressive trading. So how does this Pax Gold move away then from the gold price? I thought it would have been, as a token, it would be linked to the gold price.
So it is, but naturally, just the same as with ETFs, you can have the price of the ETF deviating from the underlying holdings. Now with Pax Gold, it's sort of similar, because one token equals 1 troy ounce of fine, good delivery. That's a mouthful. 1 troy ounce of good delivery gold London bars. I think I said that right now. And you can still have a token that trades at a different price to that actual underlying gold price. Now, usually what happens is, as soon as that price deviates by a fraction of a percent, you'd have a market maker or some arbitrager out there that would come in and then push that price back and make a profit out of doing that. So there's a lot of companies doing that, but again, it's, you know, how much are you trading? That's going to impact the prices. And again, we haven't dealt with many traders, unless you, as I said, trading with more than 1 million Rand. I don't think it's going to be a major concern at all.
Well, you know, it was interesting because I phoned around to get Kruger coin prices, and you see just between dealers different prices. So they don't, I mean, theoretically, it should track identically the price of gold, but of course they have their markups on it, or marked up, they want to make a bit of a profit on it, and it depends, I suppose, on what they're prepared to offer you. So I suppose all of these things never actually trade at their exact value. There's always going to be some sort of, whether it's a fee or a demand premium, that comes into play no matter what but you're close enough, I suppose, to the actual price, but it could deviate from that perspective.
Yeah, no, if you compare it to oil, and I'm sure you saw what happened to oil, West Texas Intermediate oil, what is that, like 6-7 weeks ago when it went negative for the first time ever? That was a huge disconnect between the derivatives market and the actual physical oil market. And gold, I've never seen that happen. We're living through very interesting times, so never say never, but it isn't the same sort of structures. And I would go as far as to say that I don't think you would ever see a price deviation of greater than 0.5% to 1%, because there's too much profit to be made if it does deviate by that much for somebody to come in and make a profit out of trading it.
Well, I suppose also the whole issue with that incident was actually taking physical ownership of oil. Whereas, the oil comes these massive barrels, and now this poor ETF had to take on the oil, and they couldn't, and they had to therefore find somewhere. It was actually a storage issue. Whereas I think that, gold sits in vaults and probably just passes around little certificates rather than actual deliveries of gold arriving. So maybe that's also part of why we would have less of those issues. When something is actually used in the economy, it probably can reach those points of deviation differently.
Yeah. You brought up a very interesting point there, Maya. So you said certificates, they pass around certificates. You don't think it's really strange that we still live in a day and an age where, we're having calls like this, right? Living in different cities, enacting and doing everything digitally, but we have physical certificates for certain delivery. And I remember when I was working as an analyst in Johannesburg, we bought a whole bunch of bonds and various other financial products. And 3 weeks later, we received this really big parcel in the post. And we opened up the parcel, and it was all the stock certificates and bond certificates and old school, like stamped, notarized, and all of that. I still kind of scratch my head and think like, well, 40 years ago, sure. But today we've got, digital assets. We surely should be more digital than certificates.
Yeah, no, absolutely fair enough. And I always think, I don't know if you've come across any clients like this, but every now and then you get across somebody whose grandfather passes away and they discover at the bottom of his document this share certificate for De Beers or something, Angler. And suddenly this thing is worth, I actually know someone, I think it was worth about 5 million rand, this share certificate.
What?
So that's kind of what we hope for, Sean. I think when those pieces of paper, that someone's going to open the box and there's going to be a certificate from 100 years ago on a company.
I think just the same way as you said, how somebody digs in this box and then they find the De Beers share certificate. I will say something that, again, coming from me, I'm in the crypto space, but that's the way we're going to view money. Our grandkids are going to look at us and be like, you had physical money that you shared with people? It wasn't all digital and QR code based and all the rest? They're going to be like, what the hell were you guys doing?
Yeah, so maybe Mapelo hold on to those 5 rand coins because they may be extinct. So we had Sean in the earlier podcast discussion on coins. We were discussing this 5 rand Mandela coin. Everyone gets held onto these freaking coins thinking they have value one day. So they may do. Your grandchildren, you'll be able to bring them up and say, this is what we But thanks, Sean. That was very interesting. And of course, once again, I think these discussions are so important in bringing us actually forward into the technological age and the rate of change that is happening, and definitely the adoption that we're going to be seeing coming forward.